Let's see if our next guest has the same doomsday prediction for the pound. Joining us now in our London studio, I'm very pleased to say, is Dennis de Jong. He's managing director at UFX. Dennis, thank you so much for joining us. When you look at pound, first of all, what exactly is the fallout? How much do we understand what Brexit will do? We saw funds closing down in real estate. We see the pound plunging. Have we found a floor, or is there more to go?
Francine, you're very right. I don't think we actually have realized what it means, Brexit, and what could be the aftermath of a Brexit and when it will happen. So I do think that we will see there's a lot more room for the pound falling, and there are many of the aspects which are not known to us yet with the Brexit.
Dennis, it's Elliot here in Tel Aviv. We're talking about the dollar a lot, of course. The pound actually gaining a little bit against the dollar, but more to do with dollar weakness, one would imagine. Against the euro, we've also seen, some pretty serious declines for the British pound. Are we heading towards parity against the euro?
We do think that might be possible, yeah. I'm quite certain it's a good chance of that happening. What we do want to say, though, is that with regards to the currencies around the world, the British pound, it's at the moment the risk is really weighing very strongly, and it's more of a repricing of the risk, which causes the volatility, and the flight into a safe haven, it's very apparent. So I don't think this is over yet.
How bad can it get? We're trying to understand this. I mean, now we talk about Italian banks. This isn't over because it's going to get messy. It isn't over because people will fear something. So I was led to believe last week that the central banks will stand firm and they'll provide such leadership that the market's fall will be tempered.
Well, generally, the uncertainty is caused due to things we don't know about Brexit yet, what's going to happen exactly. But two specific things I think are very important as of today and yesterday. The first one being that what you've just mentioned before, the withdrawals of real estate property funds, which really is causing a lot of uncertainty across the whole European markets, and especially for the UK. And the second point being that the Italian banks seem to have some liquidity issues. There are two factors here which are very important, which are the non-performing loans and the general liquidity issue, and considering that Italy is one of the largest economy of the euro area, it is going to definitely cause a lot of more uncertainty in the market.
Right, but on the funds, every day there's a fund going down because of real estate. Is this only because of Brexit and real estate, or could it be something more systemic, like the funds in 2008 from BNP Paribas that closed down right before Lehman went under?
I think it's too early to say that.
It's a loaded
really.
question.
Yeah, I think it's too early to say that, to be honest. As of now, we of course seeing a liquidity mismatch between people trying to withdraw their funds and being able to sell property to actually get the cash for people to withdraw their funds. But it also turns out it will also be important to see how will the Brexit and how quickly it will be resolved, and how quickly will we know very clearly what's going to be awaiting us.
Dennis, I know this only because my mother's pension happens to have this, but there's a Standard Life global property fund has actually been going through the roof, so to speak, in the wake of the Brexit vote, probably because a lot of its assets are not in pounds and the shares are priced in pounds. We've seen the FTSE 100, a lot of the big players out there, big exporters who perhaps produce their earnings in pounds but get a lot of their sales in dollars or other currencies, also moving much higher as well. When does these benefits that we're seeing in the wake of the Brexit vote with regards to sterling, when do these benefits run out?
I think this will take time to show. I think really what we're seeing currently, and we must not forget, it's not been a long time ago since the vote has actually happened. So I think what we're seeing now is just volatility, the market being very unsure what's happening, and I would suppose that any kind of positive sentiment should really be used to either decrease exposure in the market or to try and hedge yourself.
And in terms of the Aussie dollar as well, we're also seeing some volatility there. Good to know Britain's politics aren't the only ones that are in flux, let's say, at the moment. Aussie dollar, that the Australian seeing its outlook trimmed by Standard & Poor's in the wake of that, what seems to be perhaps an inconclusive election. Is that where do you see the Aussie dollar going from here?
Yeah, I think it's actually very interesting to have the Standard & Poor's the change in the outlook to a negative from stable. But if you look at the commentaries that they've included, it's mainly focused on governmental issues and about fiscal and budget policies, which it leaves out all the economic aspects. And I would say that there's more room for further outlook downgrades than there are for stability or outlook, mainly for the reason because although the global economy is quite okay, but we do see weaker demand on commodities, which obviously weighs a lot on the Australian economy.
Who's the central banker, Dennis, that has the toughest job at the moment? I mean, if you look at yen, even if you look at Swissy, I mean, your heart goes out to Governor Kuroda, doesn't it?
Yes, all of them have a really tough job at the moment.
But what can they do? I mean, unless you intervene, for example, yen, it's all to do with dollar strength. So even if Kuroda does anything, it's out of his hands. So they just let it ride and focus on structural reform.
I would even say that the most powerful central bank, obviously Fed, but I think it's even out of their hands, because what we're seeing it's a repricing of risk and a flight to safe haven currency. So if you're seeing that dollar strength is not really related to the strength of the economy, the U.S. economy, but it's more that people want to shift their assets into U.S. dollars just because they know it's the U.S. dollar.
Dennis, can Japan do anything about the strengthening yen? There's talk about it dipping below 100 to the dollar. There's concerns that the strong yen is going to push a lot of these Japanese exporters' earnings down. It's going to push the economy into recession. Is there anything that Japan can actually do?
Well, I would say that this mark of 100, it's a very psychological mark, and I think we must see whether we're actually crossing it or we're just going to be bouncing off it. From the economic perspective and a fundamental perspective, I think they're on an okay path. They might want to set some more incentives with regards to fiscal policy and stimulus, but from the trading perspective, we really have to look at this psychological marker for 100.
Overall, what's your best play? What's your best trade right now?
The best trade right now would be to deleverage and cut down the risk in all aspects, I would say.